Hello, this presentation will start Introduction to Business Chapter 12, Part 2. It's starting on slide 9. So if you have your income and budget notes, we finished up with deduction, minimum wage actually. So minimum wage was down here. But I'll go back and I'll review a few of these. On the PowerPoint on slide 9, it shows an example of a pay stub. So usually you only get this electronically now. Most companies won't send it to you um, in an envelope anymore. But up here it just has the company name and then the employee's name that's getting the pay and a date range, internal company number, and then it has the net pay. So this person's getting paid $375 for this pay period. The pay period will always be on there with the pay start time or date and end date. This is weekly pay. That's not as common anymore. Most companies will pay biweekly or every 2 weeks. Has your social security number. It's blocked out here. A lot of times when you see social security number, it'll be blocked out. They won't print it on something because it's a vital piece of information. If somebody gets your social security number and like your birth date, they can get credit in your name. They can do a lot of things to defraud you, and create credit cards in your name and have them shipped to them and things like that. This is like the internal company's employee ID. These two things are important to know: the federal filing status and the state filing status. S stands for single. So when you start a job, you're going to fill out a form. It's called a W-4 form, and we'll fill it out later um, in the chapter. But you have to say whether you're filing as a single person or a married person. And then this number is the number of deductions. Uh, Deductions, like if I filed, I would say I have 3 children and myself. That's 4 deductions. I could say 3 children, my wife. I'd be married, filing 3 or 4 deductions. Or I'm sorry, 4 or 5 deductions. 3 of my children, me, plus maybe my wife. The more deductions that you claim, um, the less taxes that will be taken out of each paycheck. Um, and it's trying to balance it out so you don't take out too many taxes during the year or too few taxes during the year to the federal and state government. If you take out too few taxes during the year, then when you go to file your taxes each year, you're going to have to pay money in, and the IRS, the Internal Revenue Service, will start charging you interest if you get behind on your taxes. Um, if you pay too much in, which is often the case, the formulas are kind of made to where you just pay a little bit too much into your taxes, then you'll get something back at the end of the year. Here, then it talks about the earnings. And the two things I really want to talk about here is the difference of regular pay and overtime pay. They had 40 hours of regular pay. They're getting paid $12 an hour. Multiply those together, and the current for this check, they made $480 gross. Gross means total. For the year to date, that means so far, for whatever year, say this was 2020, they made $88,928. Then they have overtime pay. So this person worked a total of 42 hours. Usually, overtime, if you work over 40 hours and you're an hourly employee, you get paid by the hour, um, you'll get time and a half. That's 1.5 times your regular rate. So 1.5 times 12 is $18. For these 2 hours, they made $36. You add those together. They also receive some holiday pay, um, which is probably 192 divided by 12. You can figure out what that is. And they have some vacation pay year to date here. But this week they didn't get any. They didn't have any holidays or vacation pay. So their current total will be the 480 gross total. It's 480 plus 36 should be 516. And you can see right here it has gross current 516. That matches these two summed up. And then the amount of taxes they're taking out, that would be like federal FICA tax and withholding tax and state income tax. And then they have the deductions, and they should list the deductions. They do right down here. So they list the taxes and deductions on every one of your pay stubs. Your 401k, you're putting in 5% into that here. They're getting $25.80 a paycheck, and health insurance, they're paying into part of their health insurance. The employer will pay a lot more than this for the health insurance. The employee usually pays a smaller sum than the employer in most companies in the U.S. By the way, there's no rules or laws about how much the employer has to pay in. right? That's a negotiation between the employer and the employee. However, they have to offer group health insurance. They have to offer health insurance to employees if they have greater than a certain number of employees. And I'd have to look up the number. At one point, it was 50 employees. If you had more than 50 employees, you had to offer a health insurance. And that's a big benefit. People are going to want to work at a company that offers health insurance. You can't go to a hospital or a doctor as an individual and get the same rates of health insurance as if a company negotiates for a group of people. They're getting large discounts doing that. Here it has the total of your federal income tax, current, your Medicare, which is a health service that the U.S. government gives, mostly to older people or people that can't afford insurance. Social Security, which is a retirement benefit, or it could be disability benefit. And then this is IN, maybe they're in the state of Indiana, the Indiana state income tax. So it shows the current amounts for that and the total amount for the year. And then you say that they're directly depositing $355 into checking and $20 into savings. So if you set up automatic direct deposit, sometimes people would take money out of their checking and put it in the savings. This can help you save money over the long run. If you can't manage and put money in your checking account and keep some of it and put some in savings yourself, you can have it directly go into there from your paycheck. It helps people be able to manage their finances better. And then they have their total net pay down here. I don't know why the check amount says zero. Maybe because it's not a check, because they're getting direct deposit. Maybe it says total net pay though is $375, which would have been the gross minus all of the deductions and taxes. So every company has a payroll system that maintains all the employee information, calculates the payroll. It's a computer system that will calculate that. A lot of smaller companies, even larger companies, they can consult out their payroll. They'll have another company do it. ADP is a really big company that does a lot of payroll for lots and lots of companies. They just specialize in the payroll. Then the company doesn't have to have people and purchase the computer system for payroll and make sure they keep it up to date and things like that. There are payroll systems and computer systems that companies can buy. So a lot of companies will just farm that out to a company like ADP. Supposed to page down. It wouldn't page down for me for some reason. So I'll just do it this way. Oh, I guess that's the end of the chapter. I'm sorry, that's the end of the chapter. So that finishes up chapter 12. The rest of the notes actually are from another chapter. We'll switch chapters and go to budgeting.